Hey, this is Kyle with KyleCGraves.com. We're going to talk about what does your credit score start at? So the problem is that credit is so much of a mystery in our lives, right? Credit can run a large portion of the bigger decisions that we make in life. For instance, what car can we buy? What mortgage can we get? Can we buy a home or not? Can we apply to rent somewhere? It can affect so many different things and can cost us a lot of money if we don't know how to use it well. So, what does your credit score start at? We're going to talk about that along with how to make sure that if you're new at building credit, one, that you're going to keep your score high and build that as quickly as possible and maintain that for a long period of time so you can save money on things like interest rates, insurance, and just the opportunity that you get with a higher credit score. Then we're also going to talk about, if you already have an established credit score, a couple tips that you can keep in mind to make sure that your credit is looking as new as possible and as clean as possible. So contrary to what a lot of people might think, is you don't have a magic number that you start with. There's not one credit score number that you start with when you turn 18, when you're first eligible for credit. What ends up happening is you don't get a credit score unless you use credit. So if you've never opened any sort of credit in your life, your credit score isn't even going to exist. There's no such thing as a zero credit score. It just doesn't exist yet because no credit companies are reporting yet on your credit report. So what would happen is when you're 18, that's when you first become eligible to apply for credit or have credit extended to you. So depending on what type of credit line you open will determine what your credit score is going to be. So really, it can be anywhere on a spectrum, but for most people, it's usually going to be in the mid 600 range to the mid 700 range when you're first starting out. So let's say someone was 18 and then they just got a student loan. They're probably going to be sitting around a 650 to a 750 credit score starting out, which is awesome. The thing that's kind of holding them back from having a super high score is just low usage of credit. A credit score is not an indicator of your financial well-being or your financial health. Credit score is only an indication of how well you pay back debt. That's all that number says. So, for instance, you can be new at having credit and have a pretty decent credit score. But it's going to take you a little bit of time to continue building up that credit score. So a couple things you can do. Let's say you're new at credit, some things that you can do to start building a credit score from scratch. Number one is you can apply for a secured credit card. And a secured credit card is basically where you're going to put money down and you're going to have a limit for that amount. So let's say I gave my credit union $200. They're going to give me a credit card for $200. Okay, so that max limit is $200. And then what I can do is I can go and make purchases on that. So good practice is to use your credit card and to pay it off regularly. So for instance, you could have one card set aside and say, this is my gas card. What I do is I go and I pay for gas with that, and then every single month I pay that off. That's exactly what I do with my credit card is I go and make purchases just using my credit card. One, because I like the security of it. But then two, I want it to continue building credit. And then what I do is I pay it off every month. I just budget it in and make sure that I'm never overspending in the certain categories that I have predefined for me. But credit, again, is all about how well do you use credit. So if you have that in mind, that understanding of building credit is all about how well you use credit, then you're going to understand kind of the rules of the credit game without even actually knowing all of the ins and outs and some of the technical details of what that looks like. Because every time you make a credit decision, think, is this me using credit well? Okay, so number one, start with a secured credit card. It's going to be a great way to add that credit line to your credit report. Also, if you have, you're eventually probably going to start looking at the possibility of an auto loan or an auto lease, maybe student loans. Those are great to have on your credit report too. What you want to make sure with those is absolutely make on-time payments. Don't get credit that you're not going to be able to afford monthly, okay? Because a late payment is a huge hit to your credit score. It is an incredible hit to your credit score. It's going to stay on there for a long period of time. So when you get credit, make sure that you're enrolled in auto payments. You have money set aside, always ready to make those payments, because a late payment will cost you so much money and opportunity in the future because of a low credit score. So really, when you're building credit, it all comes down to the idea of, am I using credit well? So make sure that you're not taking out a ton of credit that you can't afford over a short period of time. A really good utilization of credit is to say, this is money that I'm taking out now, but I have a plan to pay it back, and I have a plan to pay it back in X amount of months. That is a good plan for credit. Credit is not something that you're going to keep and carry for a long period of time like a lot of people do. That's how your credit score is going to continue to lower, because you're using too much credit over too long of a period of time. Also, something to keep in mind with new credit is that your credit score is going to eventually start at one spot when you get your first credit account open. And the longer period of time, this is called the average age of accounts, the longer period of time that you have, that you're using credit, the higher your score is going to be. That's because the age of all of your credit accounts is averaged, and that age contributes to your credit score. So somebody who has younger credit, for lack of a better word, is going to have a lower credit score than somebody who has older credit. For instance, credit scores in the 800s, I usually only see people with credit scores in the 800s if they are 40 and above. And a lot of that is due to people younger don't have as much time for that credit to age. And so it just takes some time to get to some of those higher scores. So hope that clears up a little bit more of what does your credit score start at. Really, it kind of starts at a zero, for lack of a better word. It starts at nothing. There is no credit score until you open some credit accounts. And as you get history and a track record, then your credit score starts maturing and fluctuates less because you have a clear picture of how well you use credit. Okay, so use credit well. If you have questions about credit or what to do with cards and how to set them up or where to go, let me know in the comments and I'd love to help you out. Thanks so much for watching.